Welcome to the deep dive. Today, we're tackling a question that's definitely top of mind for a lot of folks in the crypto space. And
Mhm.
it's one, or let's call them a learner sent in. Is Bitcoin mining still profitable here in 2025?
Yeah, it's a question we hear a lot, and for good reason. The headlines often suggest it's just not viable anymore.
Right. The narrative is often just electricity costs are too high, end of story.
Exactly. The simple take is that the energy bills just, well, they eat up any potential profit from the Bitcoin you mine.
Okay, but we're here to dig deeper than that, right? That's the point of this deep dive. We want to really get into the nitty-gritty of the economics in 2025.
Precisely. We're not just taking the surface level view. We need to understand the complexities.
So, what are we basing this on? What sources have we looked at?
Good question. We've pulled together quite a bit. Recent financial reports from actual mining companies, industry updates, expert opinions, all current as of, well, right now, May 2025.
And the picture that emerges, it's not really a simple yes or no, is it?
Not at all. Profitability in 2025 seems to hinge on a whole bunch of interconnected things.
Like what? What are the key pieces we'll be looking at?
Well, the big ones are electricity costs, obviously.
Yeah.
Then there's the efficiency of the mining hardware itself, uh, Bitcoin's price, which is always a roller coaster.
And how miners are adapting, maybe mining other coins,
Mm.
sustainability stuff too.
Exactly. Strategic adaptations, altcoins, the whole sustainability angle, it all plays a part now.
Okay, so let's start with the basics, the core equation. Cost versus revenue. You can't figure out profit without looking hard at both.
Absolutely fundamental. Profitability boils down to, does the money coming in from mining outweigh all the money going out? Simple concept, complex reality.
Let's break down those costs first. Where does the money go? Electricity seems like the obvious starting point.
It really is. It's almost always the single biggest operating expense for miners, consistently number one.
And what are we talking, cost-wise, globally?
So the global average cost to mine one Bitcoin in 2025 is estimated around $46,000 USD.
$46,000. Okay, but you said average.
Right, and that average hides some wild variations. It depends massively on where you are.
How wild? Give us the extreme.
Okay, check this out. Lebanon. Because of government subsidies, the cost there might be as low as like $266 USD per Bitcoin.
$266? That's unbelievable.
Right. Compare that to somewhere like Ireland, where estimates suggest it could cost over $321,000 USD to mine one Bitcoin.
Wow. Okay, so location is absolutely critical. It's not even comparable. What about smaller operations, like someone trying this at home?
Yeah, for home miners paying regular residential electricity rates, it's become really, really difficult.
Is there a threshold, a point where it just doesn't make
The
sense?
general thinking is if your electricity costs more than, say, zero 0.07 cents to 0.78 per kilowatt hour, you're probably losing money.
7 to 8 cents. Okay, so electricity's huge.
Well,
That's next on the cost list.
hardware. Definitely hardware. You can't mine Bitcoin effectively in 2025 without modern ASIC miners.
ASICs, application-specific integrated circuits, specialized machines.
Exactly. Built for one purpose only. Mining Bitcoin, or rather solving the SHA-256 algorithm.
And the cost of these machines, has that changed?
It has quite a bit. Actually, it's come down significantly. In 2025, you're looking at around $16 USD per terahash of computing power.
$16 per terahash. How does that compare to before?
Well, back in 2022, that same terahash might have cost you closer to $80 USD. So the upfront cost for the tech is lower now.
A terahash being a measure of mining speed, basically.
Right. How many calculations per second? More terahashes, faster mining.
So cheaper machines sounds good, but I sense a but coming.
Yeah, there's always a catch. The issue is older ASICs. They're just not as energy efficient.
Meaning they use more power for the same amount of hashing.
Exactly. They can easily consume more in electricity costs than the value of the Bitcoin they mine. You're literally paying to run them at a loss.
And the tech moves fast, right?
Incredibly fast.
Hmm.
New, more efficient models come out all the time. So miners need to keep reinvesting to stay competitive. It's an ongoing expense.
Okay, so it's not a one-time purchase. Now these powerful machines, they must get hot.
Oh yeah, very hot. Which brings us to cooling costs. That's essential.
What kind of cooling are we talking? Just fans?
It can be industrial fans and ducting, sure, but more advanced setups use things like immersion cooling.
Submerging the hardware in liquid.
Yeah, specialized non-conductive fluid. It's
Wow.
very effective. Keeping temperatures down is crucial for performance and also for the lifespan of the hardware.
Right. If machines overheat and break down, that kills profitability.
Absolutely. So good cooling isn't just nice to have, it's vital for the bottom line.
Makes sense. Any other costs miners need to factor in?
Yep, a few more operational bits. If you join a mining pool, which most smaller miners do to get more regular payouts, there are pool fees,
How much are those typically?
usually around 1% to maybe 2.5% of your earnings. Then there are hosting fees if you're not running the machines yourself, maintenance costs, and regulatory compliance.
Compliance costs,
Right.
like permits or taxes.
Yeah, depending on where you operate, there can be specific regulations, reporting requirements, things like that. It varies a lot by jurisdiction.
Okay, that covers the cost side pretty well. Let's switch gears to revenue. How do miners actually make money?
Primarily two ways: the market price of Bitcoin itself and the block reward for mining new blocks.
And transaction fees.
Transaction fees too, yes. But they tend to be a smaller, less predictable part of the income compared to the block reward.
Let's talk Bitcoin price first. Famously volatile. How does that play into this?
It's absolutely critical. You mentioned volatile. We saw Bitcoin surge past $100,000 back in 2024.
Right, crazy times.
But by May 2025, it had pulled back to around $95,000. These swings directly impact the value of the Bitcoin miners earn.
So a high price can cover high costs, but a drop can wipe out profits fast.
Exactly. When the price is high, even less efficient miners might make money. When it drops, margins get squeezed very quickly. Miners live and die by the price.
Okay, what about the block rewards? You mentioned those are key. How do they work?
So the Bitcoin protocol has this built-in event called the halving. It happens roughly every 4 years.
And it does what it sounds like. Cuts the reward in half.
Precisely. The most recent one was in April 2024. It cut the reward for mining a new block down to 3.125 BTC.
3.125 Bitcoin per block. Down from what?
Down from 6.25 BTC before the halving. So overnight, the primary revenue stream for miners was cut exactly in half for the same amount of work.
That's a huge deal. Half the reward for the same electricity and hardware effort.
Massive. It puts immense pressure on miners to be as efficient as possible. Low energy costs, top-tier hardware. It's a survival of the fittest event, really.
And those transaction fees you mentioned earlier, do they become more important after a halving?
They can fluctuate, yeah. Users pay fees to get their transactions processed faster. Miners collect these fees from the transactions they include in their blocks.
But still generally smaller than the block reward.
Generally, yes. They can spike during periods of high network congestion, which is nice for miners, but they're less predictable than the block reward itself.
Okay, costs covered, revenue covered. Now let's zoom in on the key factors really driving profitability right now in 2025. Bitcoin price volatility seems like it's still number one.
Absolutely. It remains the dominant external factor. Bull markets are great for miners, attracting more competition.
And bear markets?
Bear markets can crush profitability, especially for miners with high costs. And it's not just the price, institutional adoption, regulations, the wider economy. It all feeds into Bitcoin's price swings.
Got it. Another thing you mentioned is the challenge of mining difficulty and the network hash rate constantly going up. Explain that connection.
Sure. The Bitcoin network automatically adjusts the difficulty of mining about every 2 weeks. The goal is to keep the average time to find a new block steady at around 10 minutes.
Okay, why does it need adjusting?
Because the total computing power on the network, the hash rate is always changing. As more miners join, or existing miners upgrade to faster hardware, the total hash rate goes up.
So more people trying to solve the puzzle.
Exactly. To keep blocks coming every 10 minutes on average, the puzzle itself has to get harder. That's the difficulty adjustment.
And what does higher difficulty mean for a miner's profitability?
It means you need more computing power, and therefore more energy, just to maintain the same chance of mining a block and getting that reward. Your slice of the pie shrinks unless you constantly upgrade.
And is difficulty still rising?
Oh, yeah. In early May 2025, it hit a new record, around 119 trillion. That's up something like 35% from just a year before. It's a relentless upward pressure.
Okay, relentless pressure from difficulty. And we talked about electricity costs varying. That seems even more critical now.
Hugely critical. The difference is stark. Big industrial miners can often negotiate much better electricity rates than small guys.
Which encourages them to set up shop in specific places.
Definitely. Places with cheap, abundant energy, especially renewables like hydro or geothermal. That Lebanon versus Ireland example really drives it home. Location, location, location. It's as true for Bitcoin mining as it is for real estate.
And the hardware race continues. Efficiency gains are key.
Absolute pivotal. The main metric is joules per terahash, JTH. How much energy you use for a unit of computation.
Lower is better.
Lower is much better. And manufacturers like Bitmain, WhatsMiner, they're constantly pushing out newer ASICs with better JTH ratings.
So miners have to keep investing in the latest tech.
Pretty much, yeah. If you want to stay competitive and keep your energy cost per Bitcoin down, you need the efficient gear. It's an arms race for efficiency.
And finally, regulations. You said it's a mixed bag globally.
Very mixed and constantly changing. Some places are welcoming, others are getting stricter emissions reporting, carbon offsets, sometimes even outright bans.
Any recent developments?
Well, there was some recent clarification in the U.S. from the SEC about how proof-of-work mining fits into securities laws, but the overall landscape is still very dynamic. Miners have to watch regulations closely.
Okay, so it's a complex interplay of price, difficulty, costs, tech, and rules. Let's make this more concrete. How are actual mining companies faring? We have some Q1 2025 results, right? Starting with Core Scientific.
Yes, looking at their Q1 results gives us a real-world glimpse, and it was revealing. They mined significantly less Bitcoin, 75% less compared to Q1 2024.
75% less. Why such a huge drop?
Two main reasons they cited: the halving, which cut the rewards per block, and a strategic decision to focus more on their colocation services, especially for AI clients.
So less focus on mining Bitcoin themselves.
Seems that way. Their revenue from self-mining dropped substantially by about $83 million, and their profit margin on that self-mining fell from 46% down to just 9%.
9% margin, that's tight. Did anything help cushion that blow?
Well, the average Bitcoin price was higher in Q1 2025 than Q1 2024, which helped a bit, and their power costs were actually lower.
Lower power costs. How?
Probably a mix of better rates and just consuming less power overall because they were mining less Bitcoin themselves.
But their bottom line, they reported a big net income, didn't they?
They did, a net income of over $580 million. But, and this is crucial, that was mostly due to a non-cash accounting gain on the value of some warrants they hold. It wasn't driven by mining profits.
Ah, okay. So the headline number doesn't tell the whole story about mining profitability. Their pivot to AI hosting seems significant then.
Very significant. They signed a big deal with an AI company called CoreWeave. It really highlights this trend of miners diversifying away from pure Bitcoin mining, looking for more stable income streams post-halving.
Interesting. So that's Core Scientific. What about CleanSpark? Their recent updates sounded more positive.
Yes, CleanSpark's April 2025 update painted a different picture. They mined 633 Bitcoin in April alone.
633. That sounds like a lot post-halving.
It is significant. Their total holdings are now over 12,000 Bitcoin. They also highlighted their operational efficiency, a good hash rate, and a decent sleet efficiency metric, around 17 JTH.
That joules per terahash number again, lower is better, so 17 is pretty good.
Yeah, 16.98 JT, they reported. That's competitive for current-gen hardware. And they sold quite a bit of Bitcoin in April, too, at an average price over $90,000.
And their CEO seemed pretty bullish.
Very. He basically said their April results proved their strategy works, even after the halving. He called the difficulty increase modest and manageable for them.
So they're sticking with the mining focus.
Seems so. They mentioned they're expanding operations in Tennessee and Wyoming, aiming for 50 exahash hashes per second of hash rate by mid-year.
50 exahashes. That's huge scale.
It is. So CleanSpark's story suggests that with scale, efficient hardware, good energy deals, and smart capital management, mining can still be quite profitable.
Okay, so two different paths emerging. Diversification like Core Scientific and doubling down on efficient mining like CleanSpark. What broader trends does this point to?
Well, the diversification into AI and high-performance computing, HPC, is definitely a trend to watch. The pressure from rising difficulty is constant, forcing that focus on efficiency. The halving's impact is real, and Bitcoin price volatility means risk management, like hedging energy costs, is critical.
So, given the pressures on Bitcoin mining, what about mining other cryptocurrencies? Are altcoins more profitable sometimes?
Yeah, absolutely. Altcoin mining can definitely be profitable, sometimes even more profitable than Bitcoin, depending on the coin, the hardware, and the timing.
It's interesting that GPU's graphics cards are still relevant for some coins when ASICs dominate Bitcoin. Why is that?
It comes down to the mining algorithm the coin uses. Some are deliberately designed to be ASIC resistant.
Meaning it's hard to build specialized hardware for them.
Exactly. The goal is often to keep mining more decentralized, preventing large players with expensive ASICs from controlling the network. It sort of democratizes mining, keeping GPUs and sometimes even CPUs in the game.
Now, you mentioned AI a couple of times, both as a diversification path for miners and impacting hardware demand. Tell us more about that AI connection.
Yeah, it's a fascinating dynamic. The AI boom, especially training things like large language models, needs enormous computing power.
And that power comes from?
Mostly high-end GPUs, the same kind of hardware that's used for mining some altcoins.
Ah, so AI companies and crypto miners might be competing for the same GPUs.
Exactly. This huge demand from AI could lead to GPU shortages, drive up prices, and indirectly make GPU mining less profitable because the hardware costs more.
So AI demand could squeeze GPU miners, but we're also seeing Bitcoin miners actively move into AI.
Yes, they already have the infrastructure, the data centers, the power contracts, the cooling systems. It's a natural fit for them to offer high-performance computing services to AI companies.
Like Core Scientific with CoreWeave, and Hut 8 you mentioned is investing in AI infrastructure too.
Right. The motivation is pretty clear. Find more stable, potentially higher growth revenue streams than just relying on the volatile crypto market. It's a strategic hedge.
Okay, let's talk sustainability. Bitcoin mining gets a lot of flack for energy use. What's the industry doing about that in 2025?
There's definitely way more focus on this now. The scrutiny is intense, and the industry is responding.
How so? More renewables.
Significantly more. Recent data suggests over half, something like 52% of the energy used for Bitcoin mining globally now comes from renewable or low-carbon sources.
Over 50%. That's quite a shift. What sources are we talking?
Wind, solar, hydro, nuclear.
Basically cleaner energy.
Renewables can offer lower long-term energy costs, which is a huge economic driver. Plus, there's pressure from regulators, investors, and the public to clean up the image.
Are there other efficiency efforts besides just using cleaner power?
Oh yeah. The hardware itself keeps getting more efficient, that lower JTH we talked about. Better cooling solutions like immersion help. And some miners are even using AI to optimize their own power usage.
AI optimizing mining energy use. Interesting loop there.
Right. Efficiency is just becoming absolutely critical for profit, especially after the halving cut revenue. Every watt counts more now.